Welcome to Keeping Up with Trends. This is Fedrizak, Senior Trading Strategist here at CMTrading, and we're joined with your host, Sergio Davids.
Hey, Fred. How you doing, man?
Good. What do we got on the plate?
Cool. Well, all eyes on US CPI this month, and it's quite interesting for me because not too long ago, back in 2022, we had US inflation of 9%, and yes, inflation has been high and interest rates have been high simultaneously throughout 2023. We're now in February where it's down to 3.2%. However, we are seeing that, in America specifically and in South Africa, fuel prices are up, food prices are up. So I guess it all ties back together with, is the Fed going to lower interest rates later this year?
So that was the biggest question. All right. No, so we said interest rates are up, right? So the question
Yes.
is in what sector is, excuse me, we said CPI is up, not interest
Yeah,
rates. So what sector is specifically adding this stress onto the CPI? Meaning, in CPI, there are several things that are considered, right? There's gas
yeah.
prices, there's food prices, there's
Oh,
rent,
retail, yeah.
right? So there's all these type of prices. So it doesn't necessarily mean that they're all up. Okay, when you hear the word CPI, it doesn't mean that
Mm-hmm.
everything is up, right?
Right.
But there are certain parts of it that are putting some more stress onto the market. Specifically, I would say energy prices, food
Mm-hmm.
prices are not, ironically,
Yeah.
at least not
They've,
yet,
they've been flat, apparently.
and
I mean, I
and
haven't
shelter,
seen it in the stores, but apparently it's flat.
right, and shelter. Shelter
Yeah.
has been one that has considerably increased also. So it's really just those two sectors that have really just put a bit of a stress onto the CPI. As a result of that, what
Yeah.
happens? The value of the dollar goes down, but the value of the dollar doesn't necessarily go down versus the euro just slightly, maybe about maybe about 50 pips, or something to that nature. It didn't really make that big of a difference on the larger scheme in terms of the forex symbols. However, what did we see in commodities? Gold broke out.
Oh, yes. I was about to raise that. And, I always find it so fascinating because gold normally, is a big indicator of, um, how well, an economy is doing. I mean, we saw gold prices very low back in, 2020. We hit, recessionary environment, gold spikes, right? But now I'm not understanding the correlation because gold is at a record highs, you know? I mean, what was the last price? Like, 2135 back in December 23,
So
and
gold is,
now it's pushing. Now it's pushing even higher. It might be,
yeah, almost 2200.
2180.
Yeah, so
So
gold.
what's the correlation there? What's happening with
Okay, so
gold?
gold has always been like the haven for inflationary environment.
Right.
Always, always. So now, people who have cash on the sidelines. Okay, well, even if they don't have cash on the sidelines, even if they
Right.
have stocks, that even if the stocks go up, there's a relatively cap on how much more your stock could go up, right? So you've been asking me forever, should I buy Nvidia? Should I buy stocks like Amazon at these levels? And that's really the challenge because Amazon's or Nvidia are going to have to make that much more, in order to lure investors at these current levels. So it
Right.
adds much more stress on the market. So the next best thing, really, to staff off inflation is gold. Gold's
Gold.
always
Yeah.
been gold's always been that standard that we've staffed off inflation. I mean,
But
it's it's within the fabric of the economy. Okay, you can't take it away. It's the foundation of all of our economy is based on gold,
sure.
right?
But but my question to you then is, when inflation, well, specifically in the US, was you know, relatively high compared to like 9% back in 2022, right? I mean, it dropped to about, what was it, 7% beginning this time last year, 2023. And now it's down to 3.2%, right? So clearly inflation is slowing, right? Going down. And yet, you know, conversely, gold is up. So I'm not quite understanding, you know, that relationship. Surely gold should be going down because data shows inflation is slowing, you know?
Yeah, but at a certain point, I mean, gold has gotten to certain levels
Yeah.
that it's pretty much like on its close to its highs.
Yeah.
And
Record highs, in fact.
I think the market is still a little bit weary that we may have not really staffed off this entire CPI, meaning like
Yeah.
we did mention, the Fed did mention higher, longer, which meant
Mm.
that they're going to keep the interest rates higher for a longer period of time, which does affect the rest of the markets. Um, we're not out of the woods, okay, in terms of inflationary numbers. There's a few factors why we're not out of the woods. One of them is geopolitically. Um, Russia having a war with the United States has not really, helped the situation. So we're finding ourselves really in a very,
Yeah.
I would say, a
It's,
very unique scenario.
yeah, geopolitical tensions all over. I mean, we've got the ongoing war in Ukraine. You've got Red Sea tensions between Houthis and, well, I guess the
And
United States.
right.
We've got pressure from China and Taiwan, which is, um, ongoing for the past decade. And then South America, you've got Venezuela might go to war with its much smaller neighbor. So yeah, it's a it's an interesting world in terms of political tension. But speaking of, how this all sort of affects assets, oil is an interesting one for me because it's been on a sort of downward, not spiral, but it's way off levels that we seen beginning of 2023, and of course the high that we saw in 2022. I mean, it's well, WTI is at about $80, Brent crude 84. I was reading this study, well, this report from OPEC, where they're forecasting oil production to be in a deficit this year, but in a surplus in 2025. So what's happening in the oil market?
So oil has just been stabilized in terms of its price over, I would say, from the beginning of the year.
Yeah,
Yeah, towards the end of last year, we rallied,
yeah,
and then we came off of our highs from $95 a barrel back down to about $68 a barrel.
yeah,
Um, Maybe that's mostly because of output in the oil markets, less than anticipated demand from the rest of the market. And that has really added some factor onto the price of oil. I mean, we look every time we hit $80 a barrel, we look like we're
yep,
about to break out, and then we don't, and then it just peters out. So, this is the type of thing that we're just currently facing in terms of what the market is doing right now, um, and it's just a reality. That's all it is. It's just that's where we're at. I mean, and it's not a bad thing. I mean, $80 a barrel is, it kind of keeps the market stabilized,
yeah.
especially when
It's
it comes.
it's way off from $120, which we saw in 2022, and much higher than, what was it, sub $20 back in
Well,
2020. So
yeah, well, that
yeah, oil has had an insane, trajectory in the last 4 years.
it's it's a few things. It's the world, it's the economy, it's really a few things that have factored into what the price
Yeah,
of oil has been over the past, I don't know, 5 years.
yeah.
But again, that's just the reality we're living in right now. It's just we're living in a crazy world, and crazy world means crazy markets.
So this is the new normal, hey? Crazy markets.
But I'm saying it's been pretty stable over the past couple of months.
Yeah, fair enough.
Yeah.
If I can tie things back to the CPI, right? For traders out there, what should they be looking at, this week specifically? What
Well, I mean,
opportunities are there?
okay, so I mean, there is a PPI coming out today, which is a producer's price index number,
Right.
which is on the producer side, which makes a lot more. Uh, it makes a little bit, higher up the food chain in terms of what the market is doing. What you should be looking for. Well, we're past. Let's see, we're past all the uh, quarter, first quarter of 2024 earning report. So we've passed that. We
Mm,
passed some. We also passed the interest rate decision from Fed Chairman Powell. So he knew that the inflationary report would go a little bit higher this month. When he kept the interest rates at what he kept it and didn't budge.
you're right.
Moving forward in the next 2 months, I don't want to get political, but let's do it. Let's get political. We have Biden versus Trump. That was no
Yeah.
surprise, right?
A big showdown. I was reading this article just on that. I think there's about 40 to 50 countries this year alone which are having national elections, including South Africa.
Wow.
Bit of a crazy year geopolitically.
So I mean, this is the type of thing that we are currently living under,
Yeah,
and we need to just realize that things can change on a dime,
right.
and that's completely completely understood in light of the environment that we're in right now.
So, what would be your advice for traders? I mean, it's
So
one thing
what
to
would be my
say.
advice?
Yeah,
Okay,
yeah.
so here we go. I mean, the banks in the U.S. are doing fantastic because interest rates are
Oh,
so
yeah.
high. J.P. Morgan hit all-time record highs
Jeez,
yesterday. So
all-time
did
record high, yeah.
Dow.
I think Goldman
So
Sachs as well.
Goldman Sachs. I haven't been following Goldman. I usually just look at both of them. It's all the same. It's a sector.
Yeah,
It's the bank sector, and J.P. Morgan's the largest financial institution in the world.
right.
A lot of stability there, headed by Jamie Dimon, who's a phenomenal, probably one of the best CEOs
Yeah,
of this generation for sure. For sure, for sure, one of the best I've come across. Really, very on top of
okay.
his game, and really developed himself personally. Just wonderful, wonderfully done, executed, and he's a good PR person for Chase as well. So that's a big deal. So I would look at the bank stocks. Keep on looking at the bank stocks until nothing changes. They're going to hit new highs because this is the type of environment that they make most money.
Excellent, excellent. I think on that note, I'd love to unpack the CPI more, and I'm going to watch this week very closely. So, to all the listeners out there, please like and subscribe, and I'll see everybody on the next one.